So, quick question here coming in. If either of you want to take it and then sort of touch on this back and forth, how can cryptocurrency businesses and related companies prepare once these new rules come into effect? Any thoughts on that? Elaine, would you like to start with that one?
So I think that's a big question that is part of the hour and a half that we have here. But I think the blockchain will actually be an asset because there's a record of how people move their cryptocurrency within certain exchanges. Vetting the wallet as it goes in is another tool. And cryptocurrency exchanges will, in many ways, need to decide what kind of an actor they're going to be out in the space. There are certain cryptocurrencies that have come forward and said, we want to be regulated, we want to be in compliance, we want to be in the United States, you have to be approved in every jurisdiction, state and federal. And have put themselves forward as a cryptocurrency in that space. There are other cryptocurrencies that will hold on to the anonymity and the ability to operate outside of government regulation. And frankly, this just is still the wild, wild west because different governments across the world are trying to figure out how to work with cryptocurrency. Brad, or Ian, did you want to add to that? I think it's a big, big question with more unknowns than knowns at this point.
The only thing I would add is the development and implementation of sophisticated transaction monitoring tools that we've seen financial institutions use for traditional finance. Those tools are being developed currently and employed by a number of crypto exchanges. But there's a number of layers to crypto transactions. Different currencies are traded within one another and then are switched into wallets that are held by different parties. And so tracking and the flow of funds is going to be critical in going into reporting financial crime, identifying and ultimately reporting financial crime.
Yeah, this is a big question, but I think sort of the fundamental answer is cryptocurrencies need to think of themselves in many respects as financial institutions and with all the same compliance obligations of financial institutions. So, what can you do to know your customer, to make sure that the money is of lawful origin, and all of that stuff that I think has traditionally been part of bank compliance programs can be built into cryptocurrency. I see no reason why it can't, but it just needs to be done. And these companies are just young and building it out.
And some would say that means we're no longer a cryptocurrency. It's going to be an interesting debate.
Okay, great. Let me see if we've got time for another question. If we can, go ahead and move on. Another question here coming in: emerging trends and challenges financial institutions must watch out for to avoid compliance mishaps. Could we just touch on a couple of those again? If Brad, would you like to start here?
Sure. I think one is the changing regulatory landscape that we discussed. A lot of these new rules, they don't have details yet. So banks are going to have to, and not just banks, as we talked about, not traditionally non-financial institutions, are going to have to keep a close watch with their outside consultants, with their legal counsel, to understand when new rules are proposed and how to act accordingly. And also is the modernization of finance, right? We have the advent of cryptocurrency, we have the advent of fintech, and a number of different players in the space. And financial institutions are going to need to know how to interact accordingly with each of these to remain in compliance.